All right, so in this quick video, I'm going to be breaking down three things that you can do to improve in your swing trading. So the first thing that you can do that I think every swing trader needs to start doing immediately, if you don't already do it, is to use multiple time frames. There are four key swinging time frames. The first one is the hourly, the second one is the 4 hour, the third is the daily, and the fourth is the weekly time frame. Now, why should you use multiple time frames in your swing trading? Well, if you use a smaller time frame such as the hourly, you're going to be looking at each candle represents 1 hour, right? So this is a smaller time frame. It's still a solid swing trading time frame. However, it can be misleading. If you see a bullish pattern here on the hourly and you ignore every other time frame, while yes, you are correct in your conviction to go long possibly off of a name that you see a bullish pattern on, or your TA is lining up very bullish on the hourly time frame, by you ignoring the other time frames, you are lacking in your due diligence. You're not completing your due diligence all the way. If you see something on the hourly that looks very bullish, look for a confluence to line up with that setup on another swinging time frame. Whether if you find it on the hourly, look for a confluence on the 4 hour daily or weekly. Okay? But if you ignore the bigger time frames, and if you're on something like the hourly time frame, for example, you definitely should look at a bigger time frame, because let's say something like the daily shows the opposite for whatever setup that you're looking at. So if the hourly shows something bullish, if the daily time frame shows something the exact opposite, if it shows something that's bearish, the bigger time frame is more dominant. That's a general rule of thumb across the board that every swing trader should use. So if you see something on the hourly that looks bullish, check the 4 hour, because that's going to be the next biggest time frame. See if your bullish pattern that you see on the hourly, see if it also lines up well on the 4 hour. Maybe you find a bigger bullish setup in play on the 4 hour. Also check for the daily and weekly. Now, if you find a confluence on the 4 hour and you originally found the trade on the hourly, if the daily and weekly don't line up, that's okay. You now have a confluence, which makes it a high probability setup on two different swinging time frames. That's still something good that you did in your trading. You did your DD, you did that extra due diligence in your setup to find your conviction for this trade, and that's great. But don't ignore the bigger time frames, because the bigger time frame is always going to be more dominant. All right. So now the second thing that you can do in your trading, or in your swing trading, I should say, is the trend is your friend. Please always remember that the trend is your friend. Okay. As a swing trader, you're going to capitalize off of the trend is your friend. Now, if we look at Facebook here on the daily, and I'm looking at it on the daily for a reason, we can see that really since the beginning of March, Facebook has been on a very, very strong uptrend. And it has not been trading below the 55 EMA, and that is this yellow moving average right here that you see going across my screen. Facebook has not been trading below the 55 EMA since all the way back here on March 12th. Okay, the trend for Facebook has been up. Now, of course, there's going to be some rocky roads, you're going to have, or your rocky days. It's not going to be a clean, straight shot up. That's not healthy. You're going to have your consolidation periods, you're going to have your pull ups, and you're going to have your pull downs. However, if the trend is your friend, I always recommend having some sort of trend indicator, to help you out with that. One of the most popular would be EMAs. I trade with three EMAs in my setup. The blue one is the 9 EMA, the purple is the 21 EMA, and the yellow is the 55 EMA. These are all trend indicators, and they help me in my trading. Something else that you should look at on any time frame that you're swinging or that you're using in your trading that can especially help you in your swing trading is look for patterns. In particular, look for breakout patterns. Breakout patterns can be something like triangles, flags, or in this case, let's look at a descending wedge. A descending wedge is a bullish breakout pattern. Notice where this wedge put price action, or put price for Facebook. This descending wedge formed from June 29th all the way down to July 19th. So almost a month long, Facebook was in this beautiful descending wedge. And notice where this descending wedge finished. It finished right at the 55 EMA. That's not a coincidence. They did that on purpose. So look for these breakout patterns, and then lo and behold, you might end up seeing that these breakout patterns are put price off of a strong technical support, which in this case, that's what the 55 EMA was. It was a strong technical support for buyers to come in and bring price up. They made a double bottom off of it. They broke price out of the descending wedge, and they launched Facebook up to a new all-time high. Look for these kind of things in your swing trading, and your life will get a whole lot easier as a swing trader. The third and final thing that you can do to help improve your swing trading is put time on your side. If you put time on your side by buying an extra week on that option, it will ease your emotions. And so when you ease your emotions, you're going to calm your nerves. And when you calm your nerves and you ease your emotions, that means you are now less likely to sell out of a trade, a swing trade, to be specific, based on fear. If you give yourself more time, you know that that trade has more time to come to fruition, to make money, essentially, right? Yes, if you buy more time, yes, it will become more expensive. That's just how things work. But you should sleep better at night knowing that you put time on this option to be safe. You did your due diligence in finding the setup. You bought the right option. You gave yourself plenty of time, and this will help ease your emotions. And you don't have to worry about selling for out of fear, which is something that's awesome. Okay, and if you put time on your side, we all trade options, I'm assuming. If you're watching this video, if you put time on your side, you don't have to worry about time decay, which means you don't have to worry about theta. And that's another big plus that goes a long way in calming your nerves and calming down your emotions so you don't sell out of fear. All right. If you have any questions about this video or swing trading options, leave them in the comments below. And if you're interested in trading with myself, and if you're interested in joining my team, following me trade by trade, make sure you click the server link in the description of this video down below.